We're jumping straight into New Era Energy and Digital today. Everyone is watching the price action, but the real story is the overwhelming legal and management crisis.
It absolutely is.
It's just completely overshadowing its massive AI infrastructure pivot.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
If you want to cut through the noise and get straight to what's really going on, hit that subscribe button. Give us a like. It helps us simplify the next big market move for you.
And what we're looking at today, it is really, for you, the learner, watching a company that just represents the highest risk, highest reward trade out there right now.
It really does.
I mean, this company, it used to be called New Era Helium. It was all about legacy assets, oil, gas, helium acreage out in New Mexico.
Old school energy play.
Totally. But then everything changed in August 2025.
That's right. They changed the name to New Era Energy and Digital, and it signaled a total aggressive pivot. They're going after next-generation digital infrastructure and integrated power assets.
In other words, AI data centers.
Explicitly targeting that boom.
Yeah.
So our mission today is to figure out, is this a legitimate strategic move, or is this just a shell company chasing headlines?
Well, the pivot itself is, it's the foundation of the whole bullish argument.
Okay.
We're in a macro environment where demand for power, for physical infrastructure to support AI, it's seemingly insatiable.
Right.
New Era Energy and Digital saw that tailwind, that massive need for energy-ready land, and they decided they were uniquely positioned to fill that gap.
Okay, so let's unpack this growth story first. The AI trend is undeniable. We all get that. But what is the specific competitive advantage they claim to have? What justifies this move?
Proponents argue they have a significant moat. Now, we have to examine that claim very carefully.
A moat?
Yeah, the thesis centers on a vertically integrated portfolio of strategically located assets in Midland, Texas. They own the land, and they own what they call powered shells.
And when they say a powered shell, what does that actually mean for a big tech company looking to build a data center?
It's pitched as a turnkey solution. They provide the site, the land, the initial structural shell, and this is crucial, the pre-integrated power capacity.
Ah, so the power's already there.
Or it's close.
Yeah.
In the race to deploy AI, hyperscale operators, think Google, Amazon, Microsoft, they're all struggling with permitting, with power generation queues.
Which can take years.
Exactly. If New Era can genuinely offer sites where the power is basically ready to go, it dramatically cuts down deployment time. That speed is highly valuable. That's the core of their supposed edge.
That does sound powerful.
Yeah.
Time is money, especially in a sector moving this fast. Now let's look at the financials because, well, we have very little hard data. What positives are the optimists clinging to?
There is one frequently cited positive. The company reportedly has low long-term debt. Now, to be clear, we don't have recent reliable numbers on their new model, but supporters point to this.
And why does that matter here?
Well, a low debt profile suggests flexibility on the balance sheet. Infrastructure projects like data centers are incredibly capital intensive.
Right.
So if they do manage to get financing or find partners, having less existing financial baggage is, helpful.
But there's a but.
There's a huge but. We have to immediately place this in context. The capital needed for a real hyperscale build-out is in the billions. A low debt profile on a tiny balance sheet doesn't guarantee a thing.
It's a small positive, not a guarantee. Okay, let's talk price action. The volatility here is extreme, and that's what's attracting all the speculative attention. We've seen drops of 41%, even 48%. Why do traders see that as an opportunity?
They see it as a technical signal of capitulation.
Panic selling.
Exactly. It's not just selling, it's when everyone who held on through the worst news finally gives up, they sell at any price. So these aggressive traders are betting that the panic is over, that all the bad news is already baked into the stock price.
Setting up a potential rebound.
A high-risk, high-reward speculative rebound, yes.
The classic contrarian argument, right? Everyone hates it, the stock's been hammered, but the underlying AI trend is real. If you believe the pivot is legit, maybe the current price looks like a huge discount.
That's the logic. But this is where we have to pivot hard ourselves. Because while that technical setup is interesting, the market is pricing in serious, potentially existential risks.
Okay.
The sheer level of legal and management risk just overwhelms that technical argument.
Let's dig into the leadership profile, because this seems to be where the fear is coming from. It's not about the macro trend, it's all about the micro execution. What are the most severe findings on management credibility?
We have to start with the CEO. The leadership is under intense scrutiny for a history of, let's say, sketchy related party dealings at prior companies.
That's never good.
No. And worse, there are serious reports suggesting this individual has a track record of running other penny stock companies straight into the ground.
That immediately casts a shadow on the whole AI pivot. If the market sees the leadership as historically unreliable, why would they trust them with a project that needs long-term trust and massive capital?
That lack of trust is magnified by their current operational reality.
Yeah.
The operational scale is, it's probably the most shocking detail we found.
Ooh.
The company reportedly has only 7 employees.
7.
7?
7 employees.
Yeah.
Just think about that for a minute.
Yes. 7 people are supposedly pivoting an old oil and gas company to build and manage next-gen AI data center infrastructure.
That's impossible.
It means they lack the internal engineering expertise, the legal teams, the robust financial departments you need for billion-dollar contracts.
It just raises severe questions about their ability to execute at all. I mean, a hyperscale operator like Google isn't going to sign a $500 million contract with a company whose entire staff could fit in a minivan.
That's right. And if we look deeper at management's decisions, we also see signs of massive capital misallocation. Reports suggest the company spent significantly more on stock promotions,
Pumping the stock.
essentially drumming up retail enthusiasm through paid marketing.
Yeah.
More on that than on core operations like engineering or infrastructure development.
A classic case of prioritizing sizzle over steak.
Yeah.
It just signals a serious lack of discipline. The priority was generating buzz, not building a business.
And that buzz, unfortunately for them, has attracted the wrong kind of attention.
That's the perfect segue. We've got the management red flags, which are internal, but the real existential threat comes when the government and regulators get involved. What's the scope of this legal overhang? It's a multi-front attack, right?
It is. We are talking about severe multi-jurisdictional legal risk. First, on the corporate side, you have multiple prominent law firms, Howard G. Smith, Frank R. Cruz, Rosen Law Firm. They've all initiated securities fraud investigations.
And what are the specific allegations in those probes?
They're tied to claims of false and misleading statements, questionable dealings, and critically paid stock promotion that allegedly inflated the price right before major events.
So it's just a pattern.
A systematic pattern intended to mislead investors, yes.
And it gets even more serious. This isn't just private investors suing. We have a state government involved.
Exactly. The state of New Mexico Attorney General has sued the CEO and his associates directly.
Wow.
This lawsuit is highly damaging. It alleges a fraudulent oil and gas scheme connected to their legacy assets, specifically 87 wells and all the cleanup obligations that go with them.
And the market's reaction to that specific lawsuit was pretty visceral, wasn't it?
Oh, yeah.
Yeah.
It was a direct catalyst for that massive 41% stock drop. Now, the company called the lawsuit baseless, but the market saw it as confirmation of instability at the very top.
Of course.
When a state AG is suing your CEO personally over alleged fraud and environmental liabilities, your ability to secure new partnerships is, well, it's crippled.
So the legal crisis is a huge distraction. But even if the lawsuits just vanish tomorrow, we still have to ask, what does the actual digital infrastructure business look like? And that's where the lack of hard data becomes a real problem.
That's the fundamental gap. We have zero recent revenue, EBITDA, or free cash flow numbers to assess the financial health of this new digital business.
Nothing.
They changed the name, they have a great story, but they have not proven financially that they can generate a single dollar of cash flow under this new model.
The absence of verifiable metrics, no revenue, no EBITDA, it means any valuation model just relies purely on speculation about the future, not the present reality. It's like buying a skyscraper without seeing the foundation plans.
And this brings us back to their so-called moat, the powered land in Midland, Texas. The argument is that this land is valuable, but you have to ask, can they even capitalize on it?
That's a great point. Power integration in key areas is highly valuable right now. But land and power, while necessary, are ultimately accessible to anyone with enough capital.
And the idea that a 7-person team with no track record in hyperscale deployment can credibly compete against established global players like AWS or Google or Microsoft is
It's highly questionable.
highly questionable. Those players have superior capital, global infrastructure, and customer trust. New Era isn't competing against the local utility, they're competing against giants. Their relative scale makes the moat look less like a fortress and more like a puddle.
So what does this all mean for the near term? If you're watching this company, what specific triggers should you focus on in the next few months?
The most immediate triggers are almost entirely legal. That's where all the short-term focus is. You need to watch for updates on that New Mexico lawsuit. A settlement or a ruling there could either remove a massive liability or confirm the risk and drive the price down further.
And what about the multiple securities fraud probes?
You have to follow the outcomes of those investigations closely. They could result in costly class action settlements, which would drain what little capital they have, or worse, lead to formal SEC enforcement. Legal news will be the primary driver of volatility.
Since the fundamentals are basically a black box, what operational proof would they need to show to validate this entire pivot?
Two things. First, they must deliver audited Q4 2025 or full year 2025 financials. And those financials have to show material digital infrastructure revenue.
Not just promises.
Not just promises, actual verifiable cash flow from the new business.
And beyond the numbers.
They need a partnership that matters. The announcement of a major data center customer contract, a binding agreement with real revenue commitments from a recognizable name, that would be a monumental catalyst. Without that, the story is just a story.
And we have to note, the current sentiment is just overwhelmingly bearish.
It is. Weighted sentiment scores are running between -0.45 and -0.80. That is extreme fear.
But that can cut both ways.
It can, because so much bad news is priced in. Any unexpected positive news, say, a clean resolution to that AG lawsuit, would likely trigger a massive short-term reversal, a short squeeze.
So let's synthesize this for you, the learner, listening today. This is a story of incredible macroeconomic potential meeting almost egregious micro-level execution risk.
The conclusion is stark. The bullish thesis cannot be credibly constructed from the available data. Not right now. You have zero recent financials, overwhelming management credibility issues, and severe legal risk on multiple fronts. This stock, in its current state, is not an investment.
It's a trade.
It is a distressed, highly speculative trade with a 6 to 12-month horizon focused purely on legal resolution.
Right. The extreme volatility is a distraction from the core issue. The underlying potential of powered land for AI data centers is absolutely real. The company correctly identified that massive macro trend. However, the critical question for you isn't about the land's potential, but whether the current leadership, with a 7-person team fighting multiple fraud investigations and a state AG lawsuit, can survive long enough to actually execute on that pivot. The story lies not in the market, but in the courtroom and the boardroom.